SOFI update here on the 11th. Let's get right into it. Huge day, 11.42%, up to 595. Most people weren't expecting that after yesterday. We stopped at like 530. We did get some news about the student loans of Biden potentially being stopped by the federal judge. I'm not sure if that probably didn't have anything to do with it, to be honest. It probably just was, it looks like a structural post earnings, like after the market started taking off, we finally get a move higher. Yesterday it was just kind of pretty much just waiting around and being kind of annoyed that we're not moving. But we finally moved today, and so now let's go over, I see three possibilities for this over the next couple of weeks. I'm going to go ahead and get the bearish part out of the way first. The bearish possibility is that we see like this: A, B, C, and then we come down here and make a 5-wave move lower to complete the overall ABC move. So this would actually be A, B, C, B, and then we'd see a 5-wave move down here. That's the bearish one. And a lot of people ask, a B wave, can the C wave end shorter than the A wave? It can. It can be the 0.61 of the A wave. So that's basically, that's a little bit past the 0.61. I did that the wrong way though. This way. So it went a little bit past the 0.61, almost to the 0.78. But anywhere between 0.61 all the way to 1.61 are as far as a C wave can go. And if I zoom in on here, I know this is a 5-wave move. So this would be A, B, and then this would be A, B, C. This is probably the least likely scenario though, because on a C wave, you want to see a 5-wave move. We didn't get that. And so I think that that's pretty unlikely. Another scenario is we got A, B, and then C up here. We finished this at 494. The bottom here is at 478. We would likely go 16 cents higher than right here, so probably somewhere around 660. That's right here actually, 660. And then that would be the overall B wave. If we zoom in here, or zoom out here, higher time frame. So we'd have A, B, C, B. And then we would get a 5-wave move lower. So whatever happens over the next couple of weeks, I would be hedging yourself if you have a long-term position, selling covered calls, buying protective puts, whatever you can to make the losses more bearable as we go down again, because we're probably going to go down again. The overall market is topping out. I think this rally is kind of, if you watch my SPY video, 400 to 412 is a good target. We hit 400 today on SPY, so we're getting close to the top, but I think there could be a couple more weeks, possibly just into the 18th OPEX. The third scenario is, actually, let's look at one more thing. One more thing is, what is the 1.61 fib of the A wave? It would have gone a little bit past there. So that's for the scenario if this is a C wave that's short, but it's probably not likely. So if we zoom in here on the 15-minute time frame, you'll see this is 5 waves. 1, 2, 3, 4, 5. This 5th wave is kind of weird, but let's say that that is only a first wave. So we completed A, B, C down here for the overall B wave. So we'd be currently in the C wave. Let's say this is only the first wave. We'd be looking for a pullback early next week to 546. And then we look for a third wave That would take us all the way to 675. And then we would pull back to about 645, something like that. And our target would be right around here at 757 all the way to 790. That is not a joke either. And if we look at this, if that's our target, and this is the A wave right here, you can also see that the 1.61 fib comes right in between that target right there. That is not a joke right there. That could possibly happen over the next couple of days. If we zoom out here on the higher time frames again, we'd be looking at this just being a B wave, and 760 all the way to 780 is a 0.78 fib. So that'd be quite a move, but that is possible. The second scenario I gave where you just go to 660 is probably more likely, and I would say this is probably the least likely. So I know I have a lot of markings on here. Let's just go over the three possibilities one more time. So we have A, B, C, then 1, 2, 3, 4, 5 down here. That's the first probably the most unlikely scenario. The most likely scenario we have is A, B, C, and that would be the overall B wave, and then we would get a 5-wave move down here too. So that's the second possibility and the most likely one. And then of course the third one, the one I just went over, this is 1, 2, 3, 4, 5, and that is the overall B wave. So we have A, B, C. C wave is 5 waves. Completes the overall B wave. So I guess the most likely target is going to be 660, and the second most likely target I'll go ahead and go with 760 because I don't think we topped out here yet. So that's the most unlikely is down here, this being the C wave. That's pretty much all I wanted to go over. There isn't really that much to go over besides that. If you watch my SPY video, I go over the dollar, I go over the VIX, I go over Apple, and a lot of the correlation is same or close to the top though. So I would say the most likely scenario is we get next week to be bullish, and then after that we start falling into the end of the year. So that's it for now. I'll put the key takeaways in the description. Let me know what you think in the comments, and please like and subscribe for more content. And I'll try to update you guys next week and show you where we're at in the chart. All right, have a good one.